Good morning, everybody. Hope the week has treated you extremely well. Mike Tedeschi over at Perspective Wealth Planning with this week's market recap video. There's a lot to actually talk about this week. As you know, over the past few weeks, we have really been looking at this ascending triangle pattern here on the S&P 500. And we did get a breakout this week, so we have made new all-time highs, and we have pushed higher here for a couple of days, even after the FOMC, where we did get that rate cut. The market still trended higher, so major news event out of the way. We're obviously still in the middle of earnings season, and there are some areas of concern for us. In this video, I want to take a look not only at the technicals, but I also want to take a look at some sentiment data. We'll take a look at some breadth readings. We'll talk about both the bull case and the bear case as we move forward here into the end of the year. The bull case is very simple. We have a very clean ascending triangle pattern with a breakout to the upside. When we take a look at the NASDAQ, we have that breakout there in the NASDAQ as well. When we take a look at the Dow Jones, we are not quite at that breakout zone as of yet. So one thing that would be in the bears' favor here is that we do not have participation from all four of the major U.S. indexes, and we know that we're not going to get participation out of the Russell here, knowing how far back it is. I'll get to that chart in just a second. So really what the bulls want to pay attention to here is that 27,400 level on the Dow Jones. If we get up above that, you have confirmation out of the three main U.S. indexes. That would, of course, be very bullish. And this is not bearish that it hasn't broken out yet. It's just one tick kind of against the bull case here, as it's not full-on participation across the board. Now, as I said, we take a look at the Russell. The Russell is still trapped inside this range. Really got to get up over that 1620 for participation there. I would expect that the market is going to continue to head higher, that we would get that breakout there on the Russell for that confirmation across all of the indexes, right? If we were to get back up above this zone, really we'd be taking a look back up at that 1742 as that next target. So while the rest of the indexes will be pushing and consistently making new highs, the Russell, of course, still has major overhead resistance, even if it gets over that 1620 level. That, of course, is one tick for the bear case here, and that is, again, participation is not all across the board. It's in more of a select handful of names. Now, when we talk about all across the board or not, let's take a look at our breadth reading, and we will see that we are back up above that zero line with that nice tailwind here for the market. And as we drew on here last time, we kind of have this channel here to the upside that is in place on the breadth reading here. And we are right kind of in the middle of that zone. We would expect us to head back up towards that 300 level, kind of the top of this channel. That would be where I would really pay a lot of close attention. You have a lot of resistance coming in from before. Now, if you're able to get up over this zone right here, really should see the market really kind of accelerate here into the end of the year. So, of course, the bullish case right here is we do have that crossover and we do have that tailwind in place. The bearish case is, of course, we're running into a resistance zone, and the market has made new highs on a lower breadth reading. So, there is a little bit of divergence that is certainly there at this moment in time that is worth paying attention to. One of the other things that would be a negative right here for the bulls, and it would be a positive here for the bears, is the spread between the smart money and the dumb money confidence. Now, dumb money being retail traders, smart money being professional and hedgers. That is something that we take a look at when the spreads get really wide. Right, when the numbers are kind of close, doesn't tell us a lot. When things get spread really wide, that typically tends to lead to a zone in which the market makes a turn back. And if we just look here at what has happened the last 3 times that the spread was like this, the price of the S&P is on this chart as well. It is the gray. You notice that we have this pullback right here. All right, then the spread gets extremely wide again in July, and we have this pullback right here. The spread gets really wide, and then we have this pullback right here. And here we are with that spread getting extremely wide. Are we going to get that pullback again right here? That would be the a big concern for me, is just how confident retail traders are versus the professional money managers at this juncture. When that spread again is really wide as it is right now, that is an area for concern. And one of the other ways that we could take a look at the S&P 500 chart is that this is not an ascending triangle pattern. it is here at the end, but what we're saying is the bigger pattern that's in play is actually this uptrend line. If we connect the highs from last February and then the last October and then earlier this year in July, right, we have a pretty solid trend line that the market has failed at each time it has hit it. And here we are right there on the S&P 500. And because we do have kind of those higher lows put in, this could be looked at as potentially a rising wedge. So that would be the other way that we technically could take a look at this market. And so what we really want to see happen here for bullish is we want to see that 30-60 zone on the S&P 500 break and break decisively. If we get up above that, there really isn't another upper trend line where we can go, oh, the market's topping, market's topping. This is that last zone of resistance, right? And it has been one that has been in play now for the last couple of years. So when we couple a bunch of different things together, we couple that the breadth readings are right near that resistance point. We don't have participation on the Dow. The Russell is still beat up. We've got the dumb money, smart money, confidence spread extremely wide, and we have a potential resistance point here on the S&P 500. This could be an area where we do have some concern. So we will be paying very close attention. If the market pushes higher here for another couple of days and we get up over this zone, then we can kind of, throw this chart idea out the window, and we can stay with this is an ascending triangle pattern breakout that's right here, and look for that upside target, which I gave you last time, but I'll give it to you guys again. Take the low, take the breakout zone here on the fib extension, and our first target really comes in about that 3250 zone on the S&P 500, which from where price is right now, guys, that would be about a 6.5% move here to the upside. The last thing I wanted to take a look at in today's video for you guys was the emerging markets. This chart, we've left all the stuff on here from past analysis, but we had this downward channel that we had been talking about, and we have now broken out to the upside as of last week or so, and we have continued to push. The next area of resistance here in on this is kind of right in here at this 1050 zone, but with the S&P and the NASDAQ pushing higher and also seeing some movement out of some emerging markets here over the last week or so, you could kind of be getting that global move. So that would be one point definitely for the bulls here as we're at taking a look at everything kind of as a whole. So to sum everything up, guys, we are at a very important zone. I think if we get a percent or two higher than where we're currently at, volume stays good. We continue to see movement out of the emerging markets and follow through there. We're in for a pretty good end of the year, barring some economic surprises or some political surprises when we just look at this thing technically. However, if we fail right here in this zone, right, not only could this be this upper trend line, but we talk about it a lot, that failed breakout. Right, that first percent or two over that breakout line is really important to stay above if it's going to be a legitimate breakout. Right, when we fall back underneath in a short period of time, right, that usually ends up being a cause for concern. A good example of that was last year, where we made this breakout, we couldn't hold over it, and then you look a month later, we were way underneath of it. Not saying that's what's going to happen here, but that, of course, is the concern when you get that breakout and you don't hold over it. So very, very important zone right here, guys. We're going to pay very close attention. As always, I'll bring you guys an update on and more analysis next week. I hope you guys